how to trade ICT, how to trade ICC, how to trade every smart money concept. This is a very simple tutorial. And we're going to look at the charts. And what you see on my chart right now, this is NASDAQ futures daily chart. And when the line breaks, is the line of a new month. And just a few concepts I want you to be able to apply, and it's this: the open, high, low, close is the true data of the market. This next set of data points is markets only do three things. So the markets only do three things: they break out, they pull back, and they continue to trend. They break out, they pull back, and they fall back inside of a range. They break out, they pull back, and they reverse. And so market only do three things. And so we have to understand that that's the true data of every market. That's the true data of price. It's the open, high, low, close. It's the trend, the consolidation, and the reversal. And so each candlestick has those three criteria inside of the particular attributes and characteristics of each candlestick. Each monthly bar, each weekly bar, each daily bar, each 4 hour bar, every 1 hour bar has those characteristics. You cannot change those characteristics. That's the characteristics of the market. The next element is time. So the element of time, you have price, but price doesn't have meaning without time. Time is important because time is the element that high frequency algorithms, institutions, or the composite man, however you want to coin those concepts. It really don't matter how you coin the concept. It's a matter about what you believe, your point of view, and can you craft money out of the market from your point of view. Time is the next element. So the monthly bar, the monthly break is an important time element to me. It may not be an important time element to you. Time is so important that I call time the injection of time is the injection of liquidity. And so when you study time in that concept, you understand that that time equals frequency plus amplitude. The amplitude is the injection of the actual market makers, the injection of liquidity inside of the market to deliver price from one inefficiency to another inefficiency, to balance price, balance markets, that way economies and assets that's tied to that particular market will still stay in place, right? And so here we have how do you trade ICT? How do you trade ICC? How do you trade candle range theory? How do you trade the highs and the lows? All those are concepts in the market. They're very important concepts. They are the minutia. I think the most important thing that we must ask ourselves is what's going on the higher time frame. Now, if you reference one of ICT videos, he stated in the things that he wish he should know. I believe it's video 1 or video 2 or 3. That's video 2 or 3, right? The things I wish I would have knew. He framed it and he said the open, the high, the low, the close. It's the most important data inside of the market. Well, when you're trading these particular concepts, the reason why I focus so much on the open, high, low, close is because inside of the open, high, low, close, there's all other concepts are unfolded out of the shell of reality that exists. And so even if you're not an open highlight close person, maybe you are a breakout, pullback, continue to trend. Maybe you're a breakout, maybe you're a consolidation trader, or maybe you're a reversal trader. You look for shorts, you look for longs and the reversal points. Well, those are all important data points, but you want to make sure wherever you apply your concepts that it fits the bigger frame. So even when you go back and study ICT, you can notice that when he went into the technicals, he started at the monthly chart, because the monthly chart, if you understand the monthly, weekly, and daily, then everything that's going on underneath you is framework with meaning and gives you confidence not only to take the trade, to increase your profitability in your trade, but also to scale into the trade. If you don't have a setup, or if you don't have a trading plan that you can scale, then that's where the refining process comes in order for us to get to a point where we are successfully, consistently profitable in this market. So let's look at the charts. Now, when we look at this chart, we have daily concepts being applied. Daily concepts being applied. We have a new month and the high and the low of the current month already in place. We are inside the previous month. We traded outside. If you check out September price action, we closed high of September. We traded outside of September, ran into the pool of inefficiencies at the beginning of the month. Check out my monthly bias video. And here we have a powerful buy setting up, because we know we're trading into old lows and we're coming into a Monday, and it gapped up. So we're looking for short-term lows all day long on that particular bar. Let's go back in time and just and frame it. Let's go back in time and frame it, right? So here you can see it gapped up, but what does that have to do with you? Well, it's the open of the day. The previous day has already traded, so you inside of a range. Where's your high probability trade setups going to come from? Question B, right? You have an old low in place. We have bullish price action and an old low in place, right? This is Asian low. So the Asian low, not the low of the day, but it's a low. And you have London high here, right? You have a good pierce. So price opens up during New York, rallies up. Because you took advantage of that price action for a short-term trade in the direction of the bias of the day, right? So it trades down, runs those lows here, runs those lows here, creates what we would call here, it runs down and fulfills that level here, right? It fulfills that level here, giving you an entry for a parabolic move up, sweeping those highs, right? So we know we could have traded that and be done for the day with 155-point run to the upside. 155-point run to the upside. Then we are in bearish conditions from the previous day, and we have a large fair value gap. A large fair value gap taking place. And during London, it runs into that fair value gap and gives us a move back down. So this is good. Monday sell short. I'm running with the direction of the higher time frame traders. Fair value gaps has more meaning now. I'm not just marking up these concepts of inefficiencies, but I'm only trading the concepts of inefficiencies that play along with the higher time frame framework. Repeat, we mark up inefficiencies, but the inefficiencies only should play along with the larger time frame framework. Thus, when you come in and you put a fair value gap order in, you are in the money. You are in the money, right? You are in the money. 50% of the fair value gap is here, and we are looking for a perfect entry and it didn't run up to the 50s. I would have been looking for a 50 run, but it runs into that area at the right time. So when it breaks down and start closing below, and it engulfs here on the 15-minute chart, it engulfs 15, 30-minute 4 o'clock candle, gives you a fair value gap, reaches up into that fair value gap here, trades back down in the direction of the higher time frame bias. We comes into New York, we sweep a low, and it gives us more of a sloppy buy, sloppy price action, but you still have good trade opportunity, asymmetrical trade opportunities at that particular level. And so, depending on when you decide to trade, will determine if you are trading in a asymmetrical opportunity or are you at a disadvantage. So when you trade in ICT, you want to always focus on the higher time frame framework. If you trade in supply and demand, you want to focus on the higher time frame framework. You want to, and so as we run these, this is here, and see if you go down, that fair value gap have no meaning on our daily chart. It's not really even an important level, but it gave us a opportunity to participate. We know we are in this bearish, inside this bearish bar, and so there's a lot of different concepts we can apply to that, but that's another video. The biggest point is, where's our next higher time frame level at, right? Well, we have, they call fair value gaps, right? But Monday, Tuesday, Wednesday, right? Wednesday expands, Tuesday, Thursday, reversal day. So we gotta make a video about our day count so we can understand the weekly template. But this video is just saying, when are you a smart money trader, you want to focus on a higher time frame. You want to keep your higher time frame analysis very simple. You want to focus on the previous day, the previous low, the previous high. You want to look for fair value gaps, inefficiencies that surrounding that candle. Understand the monthly story. Where are we at in the monthly chart? If the monthly chart is bullish, guys, if the monthly chart is bullish, it's no reason to be trying to look for magnificent sales that's taking place on the intraday level. But what it does is give you a perfect framework, because we know that the open and the close was strong in September, and the price runs up above the previous high, the previous month high, comes in Wednesday, Thursday, Friday, new week, Monday, Tuesday, Wednesday, Thursday reversal, opens up above the previous month high. Didn't even barely trade it and grab any liquidity to be able to push that price higher, because the liquidity below it would then begin to search for liquidity above it. And liquidity above will search for liquidity below. And so here we have the high being ran, the previous month high being ran for a capitulation, explosive move on a Friday, news day, whatever that day was, gave us a parabolic move looking for liquidity to the downside. Gave us consolidation price action on Monday, inside day. Tuesday, expanded the range. Wednesday, bullish, runs Tuesday high. Thursday runs Wednesday high. Friday runs I want you to pay attention to this Friday price action, guys. This how powerful the high and the low is. Let's go back. Let's go back. I want you to pay attention to this. No read. I want you to see. Well, you don't have to pay attention to a whole lot of things that's going on the market. You just want to mark your high and your low liquidity levels. You want to understand the inefficiencies that's internal, and you want to understand the inefficiencies that's external. You want to pay attention to the important price points and where price can go, and pay attention to how it opens and where it's trading at your particular session. So here we run lower. Pay attention. Monday, Tuesday, Wednesday, Thursday, Friday. Did Friday run the low of the week with Monday? Did it not close in the inefficiencies on the lower time frame? It gapped up and closed the inefficiency on the lower time frame, left that gap open, and gave us the opportunity of a lifetime. Could we scale this opportunity? Yes, we could. We could have scaled that opportunity for a powerful move in the direction of the monthly liquidity flow. The monthly liquidity flow. So this is a very powerful look at this move. How could you took advantage of this move? How could you make hundreds of thousands of dollars? You could have put a size on this move. You could have put size on this move. Look at this. This is London. We missed the move. We waiting for New York, right? We waiting on New York. We got our 1030 candle. It runs the liquidity to the upside. We get a pullback. Oh my God, guys. Look at this. Look at this. Look, let's my trade setup. I love old lows being ran. ABC into the old low. Look at that. Barely touched it. Let's rewind this just a little bit and say I'm participating, right? I'm participating. I'm looking for this. I'm waiting on this, right? I'm waiting on this to take place. I see that engulfing bar, and I'm like, time to size in. I want to size in and say I want to. Let me throw in 3 contracts, right? This a perfect scenario. And we'll just say, for kindness sake, let's put our stop here in this target here, right? Target here, and right. But look at this, guys. Look at this bar by bar. What took place? We are 4 grand in 10 minutes. But look at the power of this move. It took this low out. So if we was waiting on this low to be taken out, we would have been good in London. We come in New York and we get another opportunity of a lifetime, scaling in into the market. Let's look back. It won't let us go back 2 minutes, will it? It won't let us go. This is a 2 minute chart. 2 minute chart. Look at this. The 2 minute chart gave us a pin bar hammer, allowing us to get in before this explosive move, where we could have added size before the explosive move, right? This is a little later. That's why we go down to the 2 minute, the 1 minute to refine our entries. We understand that pin bar. Let me go ahead and get in that pin bar when it. So I want you to see that pin bar also traded into an inefficiency, which allow it to trade in the direction of the trend. We have fair value here, trades through the fair value, and then uses it as a compulsion up into those levels. If you missed the original entry, look at this. It begins to hesitate at the highs, but it pulls back again and gives us another entry. So we got one entry we might have missed if we didn't have the 2 minute chart up. Okay, boom. But we understood the framework. The why would we feel confident taking the trade like this and adding size? Well, we are in a powerful display of higher time frame traders pushing price in the direction of the trend from the daily chart. So this is almost 7 grand, and immediately we're taken out of the market. Well, what's so powerful about this? Well, we in consolidation. We in the highs and the lows. So when price swept this level, you're paying attention because you know that that's Monday's low. You know that's the low of the week. Monday came here, but Tuesday left it open. So all those who was this, and then pay attention to this, guys. London